Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. And today I want to focus on tax fraud, okay? Tax fraud can take many different forms, but I specifically wanted to talk about it on my broadcast because there are a lot of people who are out here committing tax fraud. And one, you might not know it. Two, you might think it's okay, who's going to care? But, it's all fun and games until you get audited and then you get busted, okay? Let's just know. So let's talk about number one is claiming dependents that are not yours. Okay. You've seen it. You've seen people who are, trying to claim head of household or trying to get the earned income tax credit, and so you go and borrow somebody's kids. Well, that is illegal. That is tax fraud. Okay. Not everyone is entitled to a refund. I don't care how hard you think you worked or how many taxes you think you paid. Not everyone is entitled to a refund. And especially with this year, so far, we're so early in the filing season. And people are really seeing the impact of the Tax Cuts and Jobs Act, where they're seeing, the refunds are lower. You're seeing higher tax bill. And so the temptation to go and, borrow somebody's kid to claim them to get more money back is really increasing, you guys. And let me tell you, it's just not worth it. That couple $1,000s you might get right now is not going to be worth it. Number one, if you get caught and have to pay it back. And number two, if you wind up going to jail. Okay. So, the thing about the IRS is this, like if you file your taxes and you can't pay your tax debt, they'll work some stuff out with you. But when you're dealing with tax fraud, there ain't no working that out. They will come for you and put you in jail. So number one is claiming dependents, that are not yours. Number two, claiming expenses that you don't have. And we're talking about whether it's itemized deductions, if it's claiming business expenses that you don't have. Listen, again, this sounds all well and good until that audit comes, okay? And the way that I think people get sucked in is that nothing happens after the first year. 9 times out of 10, nothing happens after the second year. But year 3 and 4, if you keep doing the same stuff, that's when the IRS starts to pay attention. And so then what they're looking at is this one individual who is doing this, or is it an individual that's running a tax firm? So this broadcast is as much for consumers as it is for tax preparers, okay? So let's talk about claiming these fraudulent business expenses. There have been too many tax people who have gone to jail over filing fraudulent Schedule C returns. This is why you hear Schedule Cs get audited the most, because that's where people commit the most fraud. I've had to tell a young man that his mother committed tax fraud. I've had to tell a husband that his wife committed tax fraud. And, and at the end of the day, if your name is on it, you are responsible. Okay? And so if you are a tax preparer who is continually filing fraudulent returns, the IRS will build a case against you. This is why we have those IP addresses, so the IRS knows where these tax returns are coming from. Okay? So they are looking to see, okay, is this tax firm, wow, they've got a lot of people who are getting refunds and nobody is owing. So it doesn't mean that that you're necessarily, as a tax professional, if all of your clients get refunds, great. But sometimes that, it makes them go, let's check this out. There might be something here. Okay. And so what happens is, and you're right. Ms. Pat said some tax preparers do this without the knowledge of the client. This is why I tell you, you have to know what is in your tax return. You have to, if you don't understand a number, then you need to ask before you sign this return. You have to get away from just looking at a refund. Filing a fraudulent business is just that. It's fraud. And people do it to increase a refund. And and let me tell you something, the main place they do it is in mileage expenses, you guys. Like, the IRS knows this stuff. This is common knowledge. So doing this is stealing, it's fraud if you get caught. Now, if you are a victim of an unscrupulous tax preparer, you're still going to have to pay back that money, because you are the one who received the money. They will, if they've done enough, they will wind up, the tax preparer will wind up getting prosecuted and sent to jail. There are so many cases of this out there, you guys. Like, I still don't get why people do this. And I guess it's because they think it's never going to happen to them. Okay. That's just not how this works. All right. So claiming fraudulent business expenses. One of the things that happened before this year, before January 1, 2018, was fraudulent, what are they called? Unreimbursed employee expenses. Now that is no longer available to the majority of the public, this will not be an issue. But preparers would, or even consumers would, claim all of these unreimbursed job expenses, whether it's mileage, whether it's the home office, would claim these expenses that are fraudulent. And so then your itemized deductions are huge, and that then reduces your taxable income. It lowers your tax liability and produces a bigger refund. The next one, number 3, is claiming false credits. Y'all need to stop with this claiming the American Opportunity Credit for people going to college. Listen, tax professionals, if you do not have a 1098-T in front of you, you do not, you don't prepare an American Opportunity Credit. You do not claim that credit. You need the 1098-T in front of you. Okay. And if you know you didn't go to college, or you didn't have a child that went to college, and someone tells you this is what this credit is for, then you don't do it. It's not worth it. It's a $2,500 credit. Is $2,500 worth you going to jail for a year, 5 years for? No. Okay. And 9 times out of 10, when the IRS comes back for you, you're not going to have the money to pay it back, because you don't went and, did your tax season boss out and spent all your money. And so you're not going to have this money to pay back to the IRS when they catch up to you. Okay, so number 3 is claiming false credits. Number 4, Miss Pat was right on it. Charitable contributions. Let me tell y'all. Okay, so again, with the tax change, it will be harder for people to claim charitable contributions, because you're going to have to exceed your standard deduction in order for you to be able to see any benefit. Okay, now when you claim these charitable deductions, you're going to have receipts. Dates, receipts, who you donated to, what you donated, all of that stuff. And so, see, if you don't have that, then that's going to go away. But all of these things are fraud, you guys. If you did not have these things and you claim them on your return, that is fraud. And fraud is something where you will go to jail. And there is no statute of limitations on fraud. As people think, well, they only got 3 years to audit this return and find this out. No. It's whenever they figure it out. If there's something fraudulent going on, they can go back until they can't find any more. So if they find out that you did something fraudulent in 2016, they're going to check for 2015. They're going to check for 2014. They can go all the way back to 2000 if they want to. As long as they're finding fraudulent stuff, they will bring them on up. So these are the types of things that, that are going on, that people are so used to doing. They get so used to doing the wrong thing that they think it's okay. And it's not okay. It's all fun and games until the IRS shows up, until people start getting letters. And this is why I also warn people about dealing with, the tax season hustlers. Like, not all tax preparers are bad. Let me say that. They're not all bad. However, if you've got someone that the only time that they do taxes is between January and April, and then after April 15th, you can't find them, you need to be concerned. Now, all tax offices, they reduce their hours after tax season, absolutely. But if you can't get a hold of your tax person at all after April 15th, that's not a good thing. It just isn't. So, I've had so many calls this week, from other tax preparers asking me, hey, can we do this? Or, taxpayers that are people that are filing. Well, I live with my girlfriend and I want to claim her child. No, you cannot. That's her child. She needs to claim her child. That child also has a father, more than likely, right? So you have to understand that, just because some child is out there and hasn't been claimed by somebody that it doesn't give you or anyone else the right to claim them. There are tests, okay? And then this is where I want to really talk about the due diligence part for my tax professionals. Listen, if you don't have the proper documentation to document these, these dependents and whatnot, do not file that return. It is not worth the money. And if you prepare returns as if you knew they were going to be audited tomorrow, as if you knew the IRS was going to show up and demand evidence of everything you have claimed, if you do that, we won't have these issues. This is why those refunds that contain the earned income tax credit and additional child tax credit, this is why those refunds don't get released until February 15th, because the IRS needs time to make sure that, folks ain't claiming fraudulent stuff. That's why that law is in place. Because once that money is gone, it's gone. And, generally don't get it back. And so then there's that, it's just a loss. So claim your dependents, claim your credits, whatever you are entitled to. Don't be trying to claim other people's stuff. And if you are a tax professional and you get busted, not only will you have a fine to pay, but you will lose the ability to practice. You will lose your tax business. They will shut you down and you will be completely blackballed. You will not be able to file taxes anymore. And if you intentionally file fraudulent returns, you don't deserve to practice. I said it. Yes. Okay. So, guys, just file your tax returns the way they're supposed to be filed. If you owe, you owe. If you don't have the money, the IRS will work it out. You and the IRS can work these things out. They're not here to go and throw you in jail. They want their money. The IRS, I don't care. Listen to me. I don't care what anybody says. The IRS is not going anywhere. Okay? The IRS has a job to do. Congress makes the laws. The IRS enforces the laws. The IRS is who goes back and makes sure that you are paying the taxes that you're supposed to pay. The IRS ain't going. I don't care how much they diminish their staff or whatever. The IRS ain't going nowhere. So they will just increase the automation to be able to catch you when you're doing some foolishness. And because there's no statute of limitations on fraud, yeah, they want to catch you. But, hey, if it take them 20 years to catch you, okay. You just going to be paying 20 years worth of penalties and interest. That's how that works. Okay. So listen, thank you guys so much for tuning into Home Biz Tax Talk. I hope this gives you something to think about. And if you need, Pat said, excuse me while I laugh. Listen, we are here Monday through Friday and you can tune in right here to get your questions answered about your home business taxes. And Dion, I will connect with you after this broadcast. You guys have a great day. You just messed all this up. I'll see y'all next time. Bye.